Welcome back to Talk Techers, where we, break down earnings calls so you don't have to. Today, we're diving into Netflix's Q4 2024 performance. And, well, let me tell you, they just threw down the gauntlet for the whole entertainment industry.
Yeah, they absolutely smashed expectations.
Yeah.
We're talking a whopping 19 million new subscribers this quarter.
Wow.
That's way beyond what anyone predicted, and it sends a clear message: Netflix is still the king of streaming.
You might be surprised to hear that those big live events everyone was talking about, the NFL games and the Jake Paul fight, weren't actually the main drivers of this massive subscriber growth.
Yeah, what's fascinating here is that Netflix credits this success to a powerhouse lineup of diverse content.
Oh, yeah.
From Squid Game Season 2 to the action-packed Carry On to the critically acclaimed Black Doves, they're proving that they can deliver hit after hit across different genres, languages, and regions.
They're keeping you glued to your screen no matter what your taste is.
Yeah, exactly.
And speaking of Carry On, this movie is on track to become a Netflix mega hit. It racked up a staggering 313 million viewing hours in less than 2 months. And it's looking like it'll even surpass Bird Box, which was a global phenomenon.
This is huge for a couple of reasons. First, it shows that Netflix can create blockbuster-level hits without relying on theaters at all.
Yeah.
That completely changes the game for the film industry.
Right. It's like they're building their own Hollywood, right, on your TV screen.
Exactly. And second, Carry On's success proves that Netflix can promote its content directly to its massive subscriber base and generate buzz organically. They don't need to rely on traditional marketing channels. They've got a direct line to millions of viewers who are eager for their next binge-worthy obsession.
All right, let's talk live events. The 2 NFL games they streamed became the 2 most streamed NFL games ever, with an average audience of over 30 million viewers per minute. Then you've got WWE RAW, which actually beat its linear viewership numbers after switching to Netflix. With numbers like that, they got to be considering a deeper push into live sports, right?
You'd think so, wouldn't you? But they're actually being quite cautious about diving headfirst into full season sports rights.
Why is that?
Well, those deals can be incredibly expensive, and Netflix has been very clear that they're only interested if it makes financial sense for both them and the league. They're not going to overpay just to chase the hype. They're playing the long game here.
That's smart. They're not letting a few successful events cloud their judgment. But they did make one very strategic move in the live sports arena, didn't they?
Yeah.
They snagged the rights to the FIFA Women's World Cup for 2027 and 2031.
No, that was a brilliant move. The Women's World Cup is gaining popularity globally, and it aligns perfectly with their strategy of offering must-see live events. Plus, they can leverage the tournament to create documentaries and series about the teams and athletes, keeping you engaged even after the final whistle blows.
It's like they're weaving sports into their overall content tapestry, creating a whole new dimension to their streaming experience. Now, let's shift gears and talk about advertising. Their ad-supported plan is officially graduated from the testing phase to a core part of their business. It now accounts for over 55% of new signups in countries where it's available. And membership in that tier is growing at a rate of 30% quarter over quarter.
And here's the kicker. Engagement on the ad-supported plans is basically the same as on the ad-free plans.
Wow.
This tells us 2 things. First, people are finding the ads acceptable. They're not, running screaming from their screens. And second, Netflix has figured out how to strike that delicate balance between making money from ads and keeping you happy as a viewer.
That's a tough needle to thread, but they seem to be doing it well. They're not stopping there, though. 2025 is going to be a big year as they transition to their own ad technology platform, starting with a rollout in the U.S. in April.
This is a game changer. By controlling their own ad tech, they'll have way more flexibility to tailor the ads you see, making them less intrusive and more relevant to your interests.
Plus, they're expecting to double their ad revenue in 2025. That's a clear signal that they're all in on advertising as a major growth engine for their business.
It's a bold bet, but they're seeing positive results, both from advertisers eager to reach their massive audience and from viewers who are willing to tolerate some ads in exchange for more affordable access to all that great content. Now, let's talk about an area that's still in its early stages, but has massive potential: video games.
This is the part that really gets my gamer brain firing. They're laser focused on creating narrative games based on their own shows and movies, which makes perfect sense. Imagine stepping into the world of Stranger Things or Squid Game as a player. That's a whole new level of immersion.
They're also exploring other areas like party and couch co-op games delivered via the cloud and games for kids. All of this with no ads or in-app purchases, creating a totally different gaming experience for you.
Yeah, it's like they're building an entire entertainment universe, going way beyond just streaming movies and shows. It's pretty mind-blowing when you think about it.
It is, and while it's still a relatively small investment compared to their overall content budget, they're already seeing positive results.
Oh, really?
Members who play games are sticking around longer and signing up at higher rates.
That's a good sign. They're clearly onto something. All right, let's get down to the numbers. They're projecting a whopping $18 billion in content spending for 2025. That's a lot of cash. But it shows they're serious about staying at the forefront of the entertainment industry.
They're expecting 12% to 14% revenue growth in 2025, which is impressive considering how massive they already are. And get this, they've actually raised their operating margin guidance. That means they're becoming even more profitable as they grow.
So it's not just growth for growth's sake. They're finding ways to scale their business efficiently and deliver strong financial performance.
Exactly. This earnings call paints a very clear picture. Netflix is transforming from a streaming service into a full-fledged entertainment powerhouse. They're pushing boundaries, experimenting with new formats, and building a business that's designed for the future of how we consume entertainment.
And that future looks pretty bright. They've got a rock-solid financial foundation, they're attracting new subscribers at a breakneck pace, and they're constantly innovating. Netflix is a company to watch, and this earnings call gave us a front-row seat to their ambitious plans.
Absolutely. Now let's move on to the fun part of our deep dive.
Mm.
The This Is Not Financial Advice segment. We're going to throw out a crazy yet plausible trade idea that was sparked by this earnings call. Ready?
Hit me with it.
What if Netflix's gaming venture takes off so spectacularly that they decide to spin it off into its own separate company?
Netflix games going public, huh? I
Yeah.
like it.
It's bold, but think about it. If their gaming strategy truly takes off and starts generating serious revenue, a spin-off could unlock even more value for shareholders.
Yeah, it would let investors bet directly on the growth of their gaming ambitions, independent of the streaming business. That's definitely food for thought. But of course, this is purely hypothetical and not financial advice. Always do your own research before making any investment decisions.
Absolutely. Now let's take a quick break. And when we come back, we'll dig deeper into some of the specifics from this earnings call, like their content strategy, their international expansion, and the competitive landscape. Stay tuned. Welcome back to Talk Tickers. Let's dive back into this Netflix earnings call and unpack some of the details that really jumped out at us.
You know, one thing that really impressed me was that even with these massive live events grabbing headlines, Netflix is still laser focused on delivering a diverse slate of films and series. They know that's the core of what keeps you coming back for more.
Absolutely. They highlighted the success of shows like Squid Game Season 2, Carry On, and Black Doves, proving they're committed to quality content across genres and languages, appealing to a global audience with diverse tastes.
And they're not afraid to experiment with how they bring that content to you. Remember when they debuted Narnia in IMAX theaters for a limited 2-week run?
That was a savvy move. It created buzz and offered a differentiated viewing experience for those who wanted it, while still reinforcing their core strategy of bringing you exclusive first-run movies on their platform.
It also sparked a whole debate about whether Carry On is the new Die Hard, and if both qualify as Christmas movies. That kind of cultural conversation is marketing gold.
Exactly. It shows they're tapping into the zeitgeist, creating content that gets people talking and debating, turning their shows into cultural events.
Speaking of shaking things up, let's talk about advertising. Their ad-supported plan is clearly resonating with a lot of viewers, and they're making big moves to build out their advertising infrastructure.
The transition to their own ad technology platform in 2025 is a major milestone. It's going to give them more control over the entire ad experience, allowing them to offer better targeting to advertisers and a smoother, less intrusive experience for you.
Plus, they're projecting a doubling of ad revenue in 2025. That tells me they're pretty confident they can make this whole advertising thing work without alienating their subscriber base.
What I find interesting is their balanced approach. They're clearly going after ad revenue aggressively, but they're also very aware of the potential downsides. Keeping engagement on ad-supported plans, similar to ad-free plans, shows they're striking the right balance.
Now let's dive into an area that I think has huge potential down the line, but is still flying a bit under the radar. Video games. Netflix is quietly building a gaming division that could become a serious player in the industry.
It's still early days, but their strategy is starting to crystallize. They're focusing on creating those immersive narrative games based on their own intellectual property, leveraging the popularity of shows like Stranger Things and Squid Game to draw you into those worlds as a player.
And they're not limiting themselves to just one type of game. They're exploring cloud gaming, which could be a game changer for accessibility. Imagine playing high-quality Netflix games on your TV without needing a console that's pretty enticing.
And they're smart to target families by offering those party games and kid-friendly options. It's a way to broaden their appeal and get the whole family hooked on the Netflix ecosystem.
It's like they're building this whole entertainment universe, pulling you in from all angles. And it seems to be working. They're seeing a positive impact on both subscriber acquisition and retention from their gaming initiatives.
It's a testament to their willingness to innovate and explore new avenues for growth. They're not content with just being the streaming king. They want to be the dominant force in how you spend your leisure time.
Now let's shift gears to something less flashy than video games, but equally crucial to Netflix's success: their content spending strategy. They're projected to spend a jaw-dropping $18 billion on content in 2025.
That's a massive investment, but it's absolutely necessary for them to stay ahead of the competition in this cutthroat streaming landscape. They're constantly battling for your attention, and having a constant flow of high-quality content is the key to winning that battle.
They're clearly not afraid to shell out big bucks to acquire and produce the best content out there. And they're diversifying their spending across a wide range of genres, formats, and regions.
And they're doing it strategically. Their content amortization is growing slower than their revenue growth, which suggests they're becoming more efficient with how they spend those content dollars.
So they're getting more bang for their buck, so to speak. And that disciplined approach is reflected in their improved operating margin guidance. They're finding ways to become more profitable, even as they invest heavily in growth.
It's a delicate balancing act, but they seem to have mastered it. Now let's turn our attention to another crucial aspect of Netflix's business, their international expansion. They're already a global force, but they're still finding ways to expand their reach into new markets.
They're doing a great job of creating localized content that resonates with specific regions and demographics. This is key to attracting and retaining subscribers worldwide.
Absolutely. They highlighted the success of shows like Alice in Borderland from Japan and Delhi Crime from India, proving they're not just about exporting American content, they're investing in local storytellers and creating content that reflects the diversity of their global audience.
And they're being strategic about pricing in different regions, taking into account things like currency fluctuations and purchasing power.
That's a smart move. It allows them to tailor their pricing to the unique economic realities of different markets, making sure they remain accessible to a wider audience. They're not trying to force a one-size-fits-all pricing model. They're adapting to the specific dynamics of each region.
This earnings call really drove home the point that Netflix is playing the long game. They're building a sustainable global business that's built to weather the constant shifts and changes in the entertainment landscape.
They're not just reacting to trends, they're anticipating them and positioning themselves to lead the charge. They're not just a streaming company, they're becoming a full-fledged entertainment conglomerate.
And they're a force to be reckoned with. This earnings call gave us a glimpse into their ambitious plans, and it's clear they're not afraid to take risks and push the boundaries of what's possible.
Absolutely. Now, before we wrap up this part of the deep dive, let's zero in on one of the most intriguing aspects of this earnings, call their move into live sports.
The success of those NFL games and WWE RAW on Netflix is a real game changer. It opens up a whole new world of possibilities for the company.
It shows the power of their platform to deliver those live events to a massive global audience. It also positions them as a potential disruptor in the traditional sports broadcasting world, which is a pretty bold move.
But they're not jumping in recklessly. They're being cautious, carefully evaluating the costs, and looking for opportunities that make sense for both them and their league partners. They're not just chasing the hype. They're thinking strategically.
Their acquisition of the FIFA Women's World Cup rights for 2027 and 2031 is a perfect example of that strategic approach. They're betting on a growing sport with global appeal, and they're using it as a platform to build narratives around those teams and athletes.
It's not just about streaming the games. It's about creating a whole entertainment experience around those events. Think documentaries, series, behind-the-scenes content, and more, all woven together to create deeper engagement and immerse you in the world of sports.
It's a smart move. And it ties in perfectly with their overall strategy of building that comprehensive entertainment ecosystem where you can find everything you need in one place.
Now let's move on to a topic that's always on investors' minds: competition. The streaming landscape is crowded these days, and Netflix is facing some serious challengers from all sides.
They definitely didn't shy away from addressing the competition during this earnings call. They acknowledged the challenges, but also highlighted their strengths and what sets them apart.
Their sheer size is a huge advantage. They have a massive global subscriber base and a content library that's hard to match.
Yep.
It's a powerful combination.
They've also got a strong brand reputation and a track record of innovation. They're constantly pushing the envelope and finding new ways to entertain you.
But they're not resting on their laurels. They know they need to keep evolving to stay ahead of the game.
That's why they're investing heavily in original content, expanding into new formats like live events and gaming, and building out that ad-supported tier. They're covering all their bases.
And they're using data and technology to create a personalized experience for you, recommending content they think you'll love. That's crucial in a world where we're all bombarded with choices.
They're not just throwing content at the wall and hoping something sticks. They're using data-driven insights to make smart decisions about what to produce, acquire, and promote. It's a sophisticated approach.
And it seems to be working. They're still attracting new subscribers and growing their revenue despite the fierce competition. They're not backing down from the fight.
This earnings call made it clear that Netflix is embracing the challenges and using them as fuel to innovate and grow. They're a company that's constantly reinventing itself, which is what makes them so fascinating to watch.
I completely agree. Now, before we jump into the final part of our deep dive, let's take a closer look at one final aspect of this earnings call: their financial performance.
It's time to crunch some numbers and see what the financials tell us about the health of their business.
Let's get down to the nitty-gritty. All right, let's break down these numbers.
The first thing that jumps out is their revenue growth. They're projecting a 12% to 14% increase in 2025, which is incredible for a company as large as Netflix.
That tells me they're still finding ways to expand their reach and reel in those new subscribers, even with so many other streaming services out there vying for your attention.
Exactly. And it's not just about growing revenue. They're also laser focused on profitability. They've raised their operating margin guidance, which is a fancy way of saying they're getting more efficient with their spending. Each dollar they bring in is working harder for them.
We touched on this earlier, but their content spending is expected to hit a mind-boggling $18 billion in 2025. That's a serious chunk of change, but it seems like they're getting a good return on that investment.
They're walking a tightrope, balancing the need to invest in growth with the need to deliver strong financial performance. But so far, they seem to be doing a pretty impressive job of keeping their balance.
Now let's talk about cash flow. It's the lifeblood of any business, and Netflix seems to have a healthy pulse.
They're sitting on a mountain of cash, which gives them a lot of flexibility. They can invest in new initiatives, expand into those new international markets we were talking about, and weather any economic storms that might come their way.
It also puts them in a prime position to make strategic acquisitions if they see an opportunity to add something valuable to their portfolio or branch out into new territory.
Remember that Netflix games spin-off idea we tossed around? Their robust financial position gives them the resources to really nurture that gaming division, potentially transforming it into a standalone powerhouse.
It's definitely a storyline worth following. Now, before we wrap up this deep dive, let's step back and consider the broader implications of what we learned from this earnings call.
Netflix is so much more than just a streaming company at this point. They're becoming a true titan of the global entertainment industry.
They're shaking up traditional media, going toe-to-toe with established players, and fundamentally changing how we experience entertainment.
They're a textbook example of innovation, adaptability, and an unyielding hunger for growth.
And the craziest part is, they're just getting started.
Yeah.
This earnings call gave us a glimpse into their audacious plans, and it's obvious that they're not afraid to take big swings and push the boundaries.
It's an exciting time to be following Netflix. Who knows what they'll cook up next?
I'm with you on that. We've covered a ton of ground today, from subscriber growth to live sports to video games.
Right.
But the main takeaway is crystal clear. Netflix is a company worth keeping your eye on.
They're shaping the future of entertainment, and we'll be right here with you every step of the way, dissecting it all as it unfolds.
Thanks for joining us on Talk Tickers. Until next time, happy investing.